What's up, traders? My name is Tsebza, and I would like to welcome you to today's review for the month of November 2021. We had a lovely time doing the October 2021, but because of time, I would not want to be able to review that. But basically, we were looking at it, and no matter how tough the market was, the conditions were, but we've managed to get out with some few pips. I'm now going to be considering for this month. Again, the conditions of the market aren't that great, but it's not a big issue. Something can still be done out of it. One, we have noticed that the correlation is at the stage of review somewhat lost or is not consistent. Our trading systems are still picking up some setups which are high probability and that can give some nice profits with less risk. Remember, as I always say, that risk is always important. Check the risk before you can just jump into. Please also note that this is not financial advice. Our signals are just for the purpose of analysis of the market and just for the purpose of review. So it's up to you to decide if you're going to be jumping into them or not. Let's get to it. We always start from home or start at home. Home first. I'd like us to look again at the USD, at the dollar. We have been bullish and we are still. You will notice that just according to this, we have been buying, or we have, in fact, we even started by linking up a potential short trade around the very same top where the price was. The price of the dollar went to the downside, and this 1435 support is the one that we believe that the price would go up. And indeed, it responded. We didn't expect that it could break this resistance so quickly, but it did. So currently, it is strongly bullish. So fully bullish. We're now kind of expecting the price to, you can see there's a H4 engulf there. I think it could finish the daily on the engulfing side. And then from there, we know that everything looks good from that point. So we are expecting the price to pull back to somewhere around 1506, 1500 psychological levels for them to continue to the 1650 levels. So it looks like the dollar strength would continue against the ZAR as the setups looks right now. So this is our view of USD ZAR. Remember that our long-term view of USD ZAR is that it could still go back to retest the 20 or the 21 levels. All right, so that's what we're looking at. So this is how it looks like on the other side, that we are also, this is still some form of resistance. We don't deny that, but this resistance has been, this supply has been tested many times. I think does not look like it's a strong one anymore, any longer, the 1535s and the 1540s. So the price is highly likely to break this level and go to the 1660. There it will find a very nice pullback back to the same area where we are now, then should be able, or then I suspect that it could push further up to the 1854, even the 1930 levels. I think that should be taking a break, because then we'll be making the record, the highs where it was during the COVID, during when we were in the lockdown, the beginning of the COVID, in the lockdown. Remember that we were once around this level of the 15s, 19s during that time, around just around the first quarter of last year. So we are highly likely, if this price can break here, they would be poised to go to 1930, 1950. I wouldn't say before the end of the year, but this could be again similarly on the first quarter of 2022. So that would be just about 2 years from to make that top and to retest it. So that is the first thing that we looked at. So I don't see any signal. I'm just reviewing, by the way, use that because we always do that. But as far as I understand, I wouldn't recommend any trade at the moment. So it's not a signal, just a setup. It's a bullish setup that could go up to 1657 or 17, and then from there drop back to the 15, then launch up to the 19.50 cents. Right. And the other one that I would like us to look at is the price of gold. Gold is also not a signal. On one side, gold is showing some form of a bullish when you look at the intraday basis. When you look at the intraday basis, like H4 channel, you can see that gold is looking to break to the upside, but there's a soft break out there of that resistance. So, and that's exactly why we're seeing some form of some scrambling there for the price. Looks like there is also on the same time frame, some bullish flag there, but be very careful about this bullish flag because this price should have nicely tested this resistance support. Is still doing that, but then the resistance of the dailies are the one holding. So let me just finish the H4 first. You can see that it's looking very nice bullish there. We believe that this support could be strong enough. The bouncing on this support is very, very powerful. And that's the one that threw the price up there. And then there, the target one was reached as we were expecting to be bullish on this market from last month, from October. And now I've revised that. I would say wait for some time and let's see what will happen. The H4 looks bullish, but the dailies are still negative. On the dailies, we are really waiting for the price to completely break free. I would say even completely break free and reach the target 2 of the H4s around 1850. The price, if it can just go above the 1850s, just to touch this level, it's going to be very key. It's going to be very key for these guys. So if they can just go at least touch the 1900, not 1850, 1900, then you can say we've got a very nice bullish gold, perhaps even for the better half of next year. Until then, we're still on the negative side. The price could still push the downside back to the 1660s. And then if it does break the 1660s, I think that's when everybody would know that they are bearish. Not a signal for me at the moment. I'm now waiting to see further confirmation of where the price of gold could go. So not a signal, but just to share the setup for those who love trading the price of oil. The dailies definitely looks like this is a bearish setup. Even if they could go up, that would take time, because then unless if the price would choose to consolidate right in between until it goes to the wire, while the price of the dollar goes up. So we are highly likely to could see in this instance that the price, though the price of the dollar could rise, but then we could see the consolidation or not much money moving away from the safe haven gold. Right, so it means that the growth of the dollar will just be more with caution, because if people don't disinvest from gold into the dollar, then that strength of the dollar would not be sustained. I think that's what I wanted to share. So that's on the gold side. But there's another setup that I would like you to also look at of the gold. And this is the one that gold really worries me. I think this is the one. Yes. Gold is really, this is another daily setup. Which daily setup I'd really like you to consider. You can see that if you do this channel looks to be very, very volatile, opening up at the end like it's a falling wedge. And this falling wedge looks like it could even push the price back up to the 1422. And it's even possible that it can go to the 1250s, 1235. But before we can go ahead of ourselves, will it break? See, so that's what we're looking for. If it does not break that 1900 level, then 1900, then it's going to be very difficult for us to say. So these guys are suggesting that gold just needs to break the 1830 levels. If they can break this 1830 resistance, according to this setup, would be going to be going back to the 1900, coming back to the 1830s, highly likely to go back to make the double top. But that breakout would only be if the price of the dollar could now begin to decline, or the trend declines. As it is right now, the dollar is showing some very good strength, or poised itself even to make make a very good recovery. The dollar index is now also back to the pre-pandemic levels. Right. So that's the that's the setup of gold. And again, on the gold side, it's not a signal, it's just for sharing. Let's now go to the Brent crude oil. The Brent crude oil is looking very, very, I think it looks good, but also has got it's a two-edged sword. It has got the upside to it because it's pretty bullish, and it also has got the downside to it, which is a short-term, what I call a short-term opportunity to sell. This is the short-term opportunity to sell, right? Because that is the resistance, which resistance also is in a bearish flag. There is the daily bearish flag. The bearish flag is completely invalidated, or this bearish pennant, whatever you choose to use it for, which is also at the bearish fib zone, then we expect this price will continue to go up. But if this pennant breaks to the downside, we can confirm that the price of Brent crude oil could drop up to the $80 levels, which is where the big demand is at the moment. And yeah, it's more of a demand also, and demand and support. So that is what one is looking at. The risk is pretty little when you go for a short here, because the stop loss should be just above the top. The top is the 86 level. So currently bearish flag that could take the price to $80. But if the bearish flag fails, then there is nothing much to lose. It's about 200 pips away. So what's the sell? Just about, not even 200 pips. This is about 124 pips stop loss for a 500 N. I guess this is 12 pips or 121 pips for 577 to 600 pips to gain. So that's the price of oil there. But then the problem about it is the daily time frame. The daily time frame shows that the price of oil could still go to the upside, because then there is a fight about whether this is a fading level, fading trend level or not. If it be a fading trend level, then some people are expecting that the fading trend level could be somewhere around the 95, and this keeps it bullish. We are at the resistance, there's no doubt. We're just looking for a resistance with good Fibonacci trading levels. So in this case, when you use the low and the highs of that impulse wave going to the upside, this current resistance does not fall anywhere closer to the Fib levels of the expansion, to the expansion levels. So in this case, the expansion levels suggest that the price could rise up to 95, 90 to up to 95. So a bit of caution there. That will be your wave number one of this bullish impulse. Then we can expect the price to drop. That is why I'm saying that if you want to sell this 85, this 84, then your stop loss must be 1,000 pips away, at 94, 95. And then from there, you can be able to just about there. Then you can know that you can come back to the same levels, about 384 or 3,400 pips. Right, that's how it is. This is the Brent crude oil. Again, it's a very, very, very low risk H1 signal. You don't risk anything more than what I'm just giving you right now, or otherwise wait and see where the price will land. The Nasdaq is a very interesting one also. The Nasdaq is also not a signal. Instead, I suggest that those who are trading the Nasdaq should rather wait for a nice pullback of the Nasdaq. Wait for the nice pullback. You can see that it broke the higher high there, the record high of September, right? And there it is sitting there nicely above, and this makes it very strongly bullish. So the best thing to do here would be to wait for the price to see if these candles that are forming on daily would be able to push the price down. There it's a dragonfly. That is just from there. Could, and especially when it comes after this candle that you see, this pin bar, which is bearish. So one could say, yes, there could be. That's why I don't recommend a buy now, nor I recommend a sell until the price comes down below this resistance. Perhaps could be a false breakout. Looks like it's a strong candle that broke out this price on Friday night. Monday, see a pin bar that is more of a reversal to the reversal. And before that, there was also during the week a candle that is more of a reversal. So one is expecting the price to get back to the 15,386, but without selling. But instead, it would be recommended, or the signal would be if the price comes back to the support, or perhaps even the support of the 15,400, and even possibly the actually 15,000 by itself. For now, I would sit and not do anything with NASDAQ, but because I know that the majority of you are following the NASDAQ, then this is how I would like to break it down for you. The NASDAQ, as many other indices, looking positive. This is the chart setup that I've been monitoring. You can see that even if it's trying to go up, there is some form of resistance there in consolidation. One can call this thing a rising wedge in an uptrend, if you put it like that. That's a bit of a rising wedge in an uptrend. So we don't expect the price to be sustained on the upside. We expect this to be a reversal pattern. And if the price can break this support of the wedge, then we expect it to go further down, at least up to, as I said, 15,000 points. Right, so when it gets there, I think there could be some nice buyers there who could either take you to the same point or even higher. So be very careful when you trade the NASDAQ. Short term, low risk, I would say even a low risk sell, but I wouldn't recommend it. I would recommend that I wait for the price to drop, then I'll buy the 15,000. That's the NASDAQ. For the purpose of our signals for the month of November, I have recommended we go for the odd US dollar sell and USD Swiss franc buy. Those who can trade the Hang Seng index, it would be great to consider buying the Hang Seng index. Let me start with the odd US dollar sell. This is a very beautiful setup of allotations, where the price moves 1, 2, 3. Then from there, it retraces 3 waves. Then from there, it goes to the downside. In this case, that would be 1, 2, forming a head and shoulder, 2 on the right shoulder, and 1 on the neckline. Breaking is expected. Then from there, going back to retest the neckline by using a 3-wave structure. Beautiful sell. So we want to sell on this one. There is the sellers coming into the market. You can see on this candle, beautiful, because this was an immediate sell that was called for yesterday. Today, the price has been dropping, and this current candle confirms that there is. Please, when you do this, try not to put your stop loss any closer. Push your stop loss slightly, right above that FZ, that Fibonacci 0.783. But if you can, and your capital can allow, just put it right above the top of where the sellers are coming in. Because even if you do that, the risk would still be less than the reward. Because if this be your risk, then the reward looks much better. Then the reward, it's almost the size, twice the size of the reward. You go in here. This looks like it's a 1:2 setup. So I would definitely recommend this one. Is not a recommendation. It's a signal, high in terms of pips, high risk in terms of the number of pips, but in terms of RR, that looks good. So if you don't trade greedily, so this is a good setup. That's how it looks like on the other side. That's how it looks like, exactly. Looking for the price to come back to this neckline, finish the 5 impulse wave to the downside, get to the neckline, buy the neckline, then go to the upside. That's how it is. And I think by correlation, it's very clear that the GBP odd supports it. So if you don't gonna be selling odd cat, but this is just indicate that the odd will weaken more than the pound getting strength, you know, because the dollar would strengthen. And I think that the odd is the one that looks to lose or to weaken, lose some gains for the month of November. These are also considering USD Swiss franc. USD Swiss franc, also a very nice buy. I know it has bounced already. There is my daily setup. The daily setup suggests that yesterday, that bearish candle that finished the day went right on the support. And today they are saying hello. So buying this current support, already the price has gone some few pips up since the beginning of the day. Just about pushed, the day is not even really much started. I think, why does it not want to give me? Just about 42 pips now. There's still some chance. Just some 42 pips from the support. The weeklies are also looking very good. There it is. That's a nice buy. Stop loss below this point, just about currently a buy. Stop loss just about 67 pips now. And then the take profit will just be there. And the first take profit would be at the 0.9495 here, where I have projected the take profit. You can see by using the screen thing, somewhere around 377 pips up. This could be 3,000, because this is a weekly chart. Okay, so that's looking very good there. So that's the USD, that's the dollar Swiss franc. And then to buy. So this is the contemplation of a strong dollar. And this is why I put my case to say that with so much strength of the dollar expected, one would see that there will be a struggle on the bullish side of gold, right? But instead, you could rather see the bearish side of the Brent crude oil. I don't think that Brent crude oil would be able to retain such amount of gray doing they have done. It's definitely overvalued, and it is in need, desperate need of correction. Last one is the Hang Seng Index. The Hang Seng Index is positive. It is done some nice potential head and shoulder. There is come back again. You don't rush it. There is coming back again. So I think that is going to be ending up on this level just before you go there. This is what we're trading. This is what I call T, or this is a parabolic T patterns. So yes, we expect the price to still remain above the T. The T would be made by this support, very parabolic in nature. That's that, and then this one. That's what I call the T. This kind of pattern would and should have kept the price to the upside, but because it's not, as soon as the price can successfully jump back into this support, then one expects a parabolic move up to the 33,535 level, 33,809 level of the Hang Seng Index. But then how would you go for it? I wouldn't wait. I would just be taking this head and shoulder pattern. In that case, I'm recommending that we buy a shoulder. That would be their shoulder. That would be a head. Then from there, waiting for the price to just give us this shoulder, which is where it wants right now. Give us the shoulder, then give us a 9.5 impulse wave to the upside. So this is what I'm looking for the month of November. I hope you guys enjoy. Please trade responsibly. There is nothing much more that's important than preserving and saving your capital. Your capital, if it's all gone, there's therefore nothing to trade with, and even the opportunity to make those profits. Until next time, thank you so much. Those who are part of our subscription, I will be doing some more videos and updating you on how we are doing on these setups. And if there are any changes, I will then be posting them there in our Telegram channel, private Telegram channel, for you to see and act appropriately. Those who have not yet subscribed to our monthly preview information analysis, you can do so by dropping us an email or a messenger on Facebook in Opulence FX. Drop us an email admin@opulencefx.ca or respond to our Telegram channel. Until then, let there be pips. Cheers.